Welcome to a Fat Profits special feature piece on our latest buy recommendation. I'm joined by our head of research, Greg Smith. Greg, welcome.
Hi there.
Greg, we want to talk today about Mainstream, which is a stock that you put up in the equities report in the last couple of weeks. First of all, who are Mainstream and what do they do?
They're effectively a back office for hire, so outsourced fund administration provide a gambit of services, and this is obviously something that's heavily in demand in Australia, given the Royal Commission, I suppose, is one thing, a bit of an outcome there, but obviously also that rising pension pot that our country has. In fact, it's the fourth largest globally. But yeah, we've been very positive on the sector, and so it's another stock we've added, and the stock, or the company should I say, has operations not only in Australia, but also Asia, the US and Europe, and so that's good for that sort of offshore earnings growth story as well.
Okay, and these businesses, there are a few of them in the funds that we own, and also there are a couple of others in the reports. We're a big fan of these businesses because of the amount of potential operating leverage in them. Obviously taking on board more clients, doesn't cost actually any more money, and they can get scaled quite easily, can't they?
Yeah, certainly that operating leverage story. So high level of fixed costs, and you reach a bit of a tipping point. But actually, Mainstream is a little bit different from some of the other ones that we cover, and they're already very profitable. In fact, they're on a P of just 12 times earnings, and they're already at the stage of actually got a very strong track record. They're also offering around about a 4% dividend yield. They've gone gangbusters over the last 4 or 5 years since IPOing, and they've now closing on $150 billion in funds under administration, and $8 billion in inflows in the first half. And they also picked up a client in January to the tune of $5 billion. So you can understand how that's all dropping through to earnings.
Yeah, 100%. So massive business. Not from a market cap standpoint quite yet, but a massive business in the total actual funds under management that they're dealing with, or funds under administration, I should say. Just looking at the chart on Mainstream, it was a 2014, 2015 IPO around the 40 cent mark, got as high as 85, 86 cents. We're currently sort of sitting around that sort of 60, 70 cent range. We're up a little bit on our recommendation. Greg, what is a price target on this stock over the coming months, and what do you think some of the catalysts for this stock are to re-rate?
Yeah, sure. I mean, obviously you've got to be, as opposed to when you're in the large caps, you've got to be a little bit sort of careful, more careful in terms of timing that entry. But that said, if you pay 1 or 2 cents more than what our original recommended price was, I don't think that's a big deal in the scheme of things, as long as you're taking a medium to long term view, and that's some sort of caution. Obviously, this is not necessarily a trade, but I think certainly there's a bit of momentum coming through in the share price charts, but I could think a reasonable initial target would be 80 to 90 cents. I'm not saying it's going to get there tomorrow, but certainly one that we're happy to back with a minimum of a 6 to 12 month window.
Okay, fantastic. Thanks a lot for the update, Greg. Thanks everyone for watching. Any questions, queries, comments for Greg, feel free to reply to this email, or you can always call us on the 1300 number, 1300 88 1177. Thanks again.
Thanks.